Money is a tool. Financial literacy is a skill you can learn. My name is Dave Gallegos. I've spent the last 25 years in the mortgage industry with a front row seat to American financial habits. And what I have to offer is so much more than about mortgages. So join me for a journey into financial literacy, brought to you by me and Zenith Home Loans. I'm your host, Dave Gallegos. Hi, everybody. This is Dave Gallegos. Welcome back to another episode of More Than Mortgage. This is the podcast that's designed for consumers. What I wanted to do with More Than Mortgage was impart some wisdom based on my experience. I had a front row seat to how American consumers live their lives financially. And I just learned so much, and it was really very educational for me. It helped me in my own personal finances quite a bit. I changed a lot of my personal financial habits because of what I saw. That's the reason that we started this podcast. I want to introduce everybody to Jacalyn Forleo. Jacalyn is my daughter. She got into the mortgage business because she got laid off from her first job after she graduated from college. I am her dad. I have to give her money anyway, so I made her start coming to work. And she was a receptionist the first day and then a processor the second. And then she moved into operations, and she became our operations manager for several years. In 2014, she transitioned over into sales, and now she's one of the top producing loan officers here at Zenith Home Loans. So welcome, Jacalyn. Thanks for doing this.
Thanks for giving me a job.
Yeah, you bet. What we want to talk about on this podcast is just from your experience. So you've closed thousands of loans over the years and helped thousands of consumers with what I believe to be the most important thing that they do in their life when it comes to buying a home and their finances, because I believe it creates generational wealth, closes the wealth gap in our country. It's really important. And so just want to hear from you what you've experienced, what you've learned helping people do this, and what you see are the biggest challenges you've helped people overcome. There's a whole bunch of things that we can go down, but just get started and tell us a little bit, and let's see where it goes.
I think the biggest challenge is just not understanding the process, feeding into all of the old wives' tales, I feel like, at this point, of how to get a loan, and you have to go to a bank and you have to put down 20%, and PMI is bad and FHA loans are bad and things like that. And so I think the first thing that I feel like I'm always doing with clients is just kind of talking them through, because they come in with all those questions, but I automatically will kind of redirect the conversation and just be like, okay, well, let's start, what's motivating the move? What's happening in your life that's making you want to have this conversation? And then it's,
What kind of things do you hear?
Well, the client I talked to today, she thought she had a lease until June, and her landlord said, nope, I'm selling it. You have to be out by February 1st. And as I sit here, it's December 19th. So she's like, okay, well, I guess I have to move, and now's as good a time as any. Let's see what I can do. I think you've got downsizing families, you've got upsizing families, or you've outgrown your space, just tired of renting, don't like your neighborhood, those kinds of things. It just kind of runs the whole gamut. Lots of people want a yard for their dog. I have a cool video of a client letting her dog run through the yard for the first time. It's really awesome. So getting just to see that,
cool.
Yeah, it's really cool. I'm like, oh yes, this is perfect. This is exactly what I want to see, because she'd never taken him over there. So I think it kind of runs the whole gamut. And then it's the questions that I ask are always, okay, well, what do you pay in rent right now if you're paying rent? And what are you comfortable with? Because most of the time clients qualify for a higher monthly payment than what they are comfortable with. And I always tell them, it's my job is to show you what you have access to. So I don't want you to miss out on the perfect property if it's $100 over what you think you want your payment to be, because you've never owned a home before. We don't know what this looks like. And so then we just kind of talk through that. And then we talk through, okay, well, what do you have access to for a down payment? Because then that helps me understand, okay, do we need to look at down payment assistance? How do we need to structure this? Do they have access to funds elsewhere, like a family gift or savings or 401ks, things like that. So we kind of just run through. I try to bring it down to real basic level, so that way it's very easily consumable for the client.
I think that's one of the things that you're talking about, which is our approach to this business. Is it's a very relationship focused transaction. It's not a transactional event for us. So what I mean by that is you've got clients that you've done multiple loans for because they come back to you again and again. All the loan officers here have that because it's what we teach. We teach, building a relationship. And it isn't just building a relationship for the purposes of getting the business. Yes, we want the business, but we're building the relationship so that we have a really strong understanding of what they're trying to do, what their dreams are, what is it they're trying to accomplish, and why. And and then getting a full picture, it allows you to just provide a much better set of solution than your typical online order taking mortgage process,
Right.
which, you know, everybody wants to go. We can talk about this a little bit because everybody was when Rocket Mortgage introduced the push button get mortgage ads for the Super Bowl that year. All of a sudden, everybody started thinking, oh, well, I can just push a button and be pre-approved. It's like, well, yeah, but you're not really pre-approved. It's very qualified pre-approval, and really you're pre-qualified is what it is. You can certainly build an AI engine to pre-qualify somebody based on the information that you enter, right? So if I put in that I make this much money and I want a house payment of this much, and I think my credit's this much, and you can be approved for that. It's like, we're not at that point now where that can all be done and it's a full on underwriting approval without a lot of steps. That's something that I think is really important to hear. This is one thing that's different about buying a mortgage that I think than is buying a plane ticket. You buy multiple plane tickets a year if you travel.
Right.
And so buying a plane ticket on your phone without talking to anybody, it's just not that big a deal because you do it a lot.
Right.
You don't get mortgages a lot. You get mortgages once every few years, and it's always different a few years later.
Right.
The technology is different. The ability to do it is different. So it's a whole different mindset. What do you see when it's, because you're at that generation, you're younger than me, and you don't want to say how old you are, but you came from a different generation where you're more comfortable with technology than people that were in my generation. Do you run into a lot of people who just, I don't want to meet anyone face to face. I just want to get a quote. And what do you see when that happens?
Lately, no. I feel like lately I've been able to get more people to come into the office, which has been great, to do face-to-face meetings and kind of run through everything. I think
what's that experience like for them?
I mean, I make it fun. If they're not laughing at least 2 or 3 times through the conversation, then I've done a bad job, because it's stressful, right? It's a lot, it's overwhelming. It's, am I going to get pre-approved, or are they going to judge me because of my credit scores and things like that? And so I have some comedic relief in my presentation, because that's just who I am as a human. And so I usually get to build a really great rapport with the client there, because I've already done that on the front end, which is how I've gotten them to come in. And if I don't do the face-to-face, in person, they come into the office, I can usually get them to do a face-to-face Zoom meeting, which is not quite as impactful, but just as good. But I'd say it's rare now that I have clients that I've never spoken to. I have had in the past where it's all been text or email, which just feels weird. But it's just okay, well, that's what they want. I don't have a relationship with those people, and they're probably not going to use me again. They were checking a box and clicking a button, and that was it. And so the ones that rate shop or that are just looking for a rate, it seems like is they're insecure in their education of the process. And so they think they're well, no, who has the best rate? And that's the one I go with. And right. It's yeah, a good rate's important, but it's not the most important.
It's interesting. You're exactly right. It's interesting that going back to when I was doing this, and because I don't originate anymore and haven't originated for multiple years, but always said the customer asks what your rate is because they don't know what else to ask.
Yeah.
And they know a low rate's a good thing. Right? The lower the rate, the better, right? That must mean my payment's going to be lower. But we've seen where so much evidence exists is going, no, a low rate isn't better. It can be really expensive. Right. It can be incredibly expensive. The number of times that we see quotes that are amazing, but they cost $20,000 in discount points.
Yeah.
And people don't understand what they're seeing. And there's just a lot of there's a lot of misleading that goes on in the mortgage advertising space. So I think that's where a lot of that confusion from. Let's talk about the customers that are coming to you. They think they need the perfect credit. Not so much that, but what do you see are the biggest challenges that people have to overcome regarding their personal finances, whether it be credit or down payment or income? What are the biggest challenges that you see that people struggle to overcome, or have the biggest challenge overcoming that you are able to, because it isn't just, we don't just talk to everybody who calls today and they want to get a mortgage and we get them a mortgage, because a lot of times there's a process. It could take months for us to, not months to get the mortgage, but months to get in a position to get a mortgage. And so talk about that, the challenges that you see and the kind of solutions that you're able to provide.
Affordability is obviously an issue. I do think consumers have an unrealistic expectation of what a house payment is versus or an unrealistic expectation of what the payment's going to be for a certain mortgage type. Like I get
a house they want.
Yeah.
Is that what you mean?
Yeah. That's what I mean.
This house, and I want it to only cost $2,000.
Yes.
Yeah, okay.
Yes. And so I think that's probably the biggest challenge is they're like, oh no, I only want to pay $2,000, but I'm looking at a $600,000 house. It's like, cool. Do you have $400,000 to put down? Because like, that's just the reality of math. It's just, that's all this is math. And so I think that's definitely an issue. I think there's a lot of people who are in like the younger demographic that are living in these like really nice apartment complexes and stuff that are paying like a really high rents that think that that translates automatically into what their housing is going to be. And they're going to have like the granite countertops and like the huge backyard and like the detached 4-car garage and things like that. And it's just not how it is. And like, we live in Colorado and we're in Denver and like, it is expensive to live here. And so I think the idea of the starter home or the starter property is kind of like completely gone out the window. And I think everybody's immediately jumping into that 4-bedroom, 4-bath dream house. That's just, it's there and but it's expensive. And
that's
so
one
then
of the things I've seen. I've noticed that more and more with that generation and the struggle that people have is they expect to buy their parents' house first.
Yeah.
Because of what their parents' house is now.
Mm-hmm.
They're like, well, I want that.
Yeah.
Of course you do.
Yeah.
But if we showed you what your parents bought first, you wouldn't want that house, but that's what they had to buy first. And I think that, and maybe that's it. It's a lot of misconceptions. Again, it's a different world. I'm not being critical of everybody. I'm saying
no.
It's just the expectation is different.
Yeah. And I think there's a lot of bad information on social media too. It's like, you've got these social media influencers who are like, look, this amazing house. It's like, none of that's real. Like, it's just not. And like, it's all fake, or they rented it, or it's somebody else's house and things like that. And so I think that creates some like unrealistic expectations of, well, what's my first house going to look like? I also think that we are, to refer back to the Rocket Mortgage reference, like we're used to being like, I can click a button and my Amazon package shows up. I click a button and my food shows up. And so I think that we've got a lot of people who are buying houses that they think are going to be perfect and ready to go as soon as you move in. And like, there is a level of sweat equity to make the house your own. And unless you're going to do a new build or a custom build, like you're probably going to make some changes to the house when you move into it to make it what you want. Because what people I think forget is that house is set up the way the person who currently lives there wants it.
Right.
And so it's like, yeah, if they put up wallpaper that like the house that my husband and I bought first, it had a lime green, like this color green wall. And I hated it. It was the first thing I changed, but those people really liked it, and cool for you, but I'm painting it white. So I think that's part of it too. And they're like, well, I don't want to have to do this, this, and this. And it's like, well, then you're gonna have to pay more. So like, I think there's just some expectations that have been misconstrued because of reality TV shows and social media and things like that, that makes it harder for some first-time home buyers to comfortably get into something, because I think I feel like there's a lot more of the keeping up with the Joneses idea now than there was maybe when you were buying houses for the first time.
I remember one of my best friends' little sister got married. And when the little sister got married, she was quite a bit younger than him, or a few years younger than him. And they came over to my friend's house and saw their friend's house, which was his third house. Mm-hmm. He bought his first house when he was like 20. And then him and his wife bought their second house, and they lived in that one for like 3 or 4 years. And then they bought this house that they're actually still in. They've been in this house for a really long time. I think they are. But his sister's husband, when they saw the house, goes like, oh, this would be a good starter home for us. This would be a good starter home. And it was kind of an insulting backhanded comment about like, oh, well, we're going to do better than this. And it's like, yeah, see, we didn't like, that's a different mindset, I think, than having, I think a lot of people could be really well served. It's like, where am I going to start in my home buying journey of, you know, if you're in your, because nobody's buying a house at 20 anymore, it doesn't seem like.
Not really.
I wish they were.
I do have a client at 22 right now. And I was like, what year were you born?
Yeah, that's awesome.
Okay.
That's awesome. Good for him.
That makes me feel super old. I'm like, okay.
Here's the truth. And you need to hear this. Houses are not going to be any cheaper than they are today. They're only going to cost more than they do today.
Yes.
So the sooner that you buy them, the sooner you're going to be able to capture that increase in equity. Just a fact, right? Mm-hmm. And so I wish people were buying them younger, but it's okay to start at the beginning. Because the beginning is just that. It's everybody starts at the beginning.
Yeah.
Right. If you've never owned a home before and now it's time to buy a home, it doesn't matter what it looks like. It matters what you're going to make it.
Yes.
Right. And so,
and what will it do for you long term?
Right. And you can do one of two things. If you buy that first house and you put all these sweat equity in it, right? You make it your own. There's one of two ways that you can leverage that. You can sell it and put the equity into another house if you don't want to become a landlord, or you can become a landlord, right? And you can keep that house and buy the next one and buy the next one. Your little brother, my son, just bought his first house.
Finally.
And super excited about that opportunity for him.
So what, 32? He bought his first house at 32.
32.
I bought my first house at 26.
Same here.
25, 26.
Yeah, I was 26. And
so, I still have my first house.
Yeah.
And I was able to. Well, yeah, we do. Thanks.
No, it's a great house. Like, that was a great house.
No, it's a great house.
Great
and
investment property.
And I bought it I bought it in 2010, so 14 years ago, almost 15 years ago. I did the same thing because I'm seeing, at the time I was processing loans.
You were freaking out about the house payment.
I was freaking out about the house payment. It was less than $1,000. I'm pretty sure. I don't know. Anyway, it was cheap. I got a great deal on the house. I bought it in 2010. We all know what happened in 2010. But I was also like, well, I remember all of the appliances in the kitchen were white. And I'm like, ugh, I don't want white appliances. I want stainless steel and da-da-da. And my realtor at the time, he's like, you're not supposed to have the super nice appliances on the first house. And I'm like, he goes, you build up to those.
Well, I think that keeps a lot of people out of the market.
Yeah, I do too.
That's what's sad. You need to listen to this, because if you're in that younger cohort of people, like in your mid-20s to your mid-30s, which is when a lot of people are buying their houses in the mid-30s, you're missing out on 10 years worth of equity. That if you would just buy now, when the prices are today's prices, and didn't wait 5 or 10 more years to buy, you're going to capture all that equity and become wealthier for it. And that's what people, I think, are missing out on, because they want, well, no, I'm not going to do that. I'd rather rent the apartment where I'm just paying the landlord's mortgage and having stainless steel appliances, because I can't afford the house I want.
Right. Well, and I think too, I mean, because I know people will be listening to this and be like, well, no, but affordability is different now. And it's like, okay, yes, but but you're looking at, like, I think it's fine to buy the condo first. Buy the 1 or 2 bedroom condo, start there, and then live there for a year or 2 years, and then move on to the townhouse, and then live there for a couple of years, and then move on to the single family. Like, there's nothing, that was how most people, that's how, I feel like that's how a lot of people, especially in a city that's got lots of condos. I know everybody's like, oh, condos are such a pain. And it's like, yeah, they can be more challenging, but there's some great condo communities out there that have good HOAs, that have great communities, that are a great starting point. I don't know. That's a different conversation. But I feel like there's people who are like, oh, well, that's a really affordable house and it's super cute, but they're just going to kind of like nitpick. But like the place that my little brother just bought, like, it's a little beat up. It's going to take some sweat equity to get it where you want it to be. The same thing with my first house and the subsequent houses. Even the house that I'm in now, I had to do some renovations to. But I also think it was
brand new when you bought it.
And it was brand new when I bought it. But there was a lot of things about the house that I didn't like. There's still things that I want to change. There's always going to be things that you want to change. I think it's a matter of, I think because of how accessible credit is too, I think we have so many people living outside of their means that they're like,
spending more than they make.
Yeah, spending more than they make, but they're okay taking on the $1,000 or $1,500 car payment and paying 36% interest on their credit card, but they won't pay an extra $500 towards to a mortgage payment.
For a mortgage.
But they're cool paying $3,000 or $4,000 for a crappy apartment that you're not. There's no tax benefits to that, and like there's no stability there, because your landlord could come to you today and say, hey, you need to move out by February 1st.
Or your landlord can tell you rent's going up 5% next year.
Yeah, and I think that's the bigger thing. I think we just need to kind of like simplify.
Well, so, yeah, I was just going to say, what's the message that you would love to get out to the people that are in? Because the people that are in your age group now are past this, but the people that are in the late 20s and early 30s, I think that's where there's a real opportunity that you're going to miss out on if you're not careful, is because they're only going to get more expensive, right? So what would that message be? Like, suck it up, because you can have that conversation with them. I can't. I'm just a boomer who was able to buy a house for $100,000 when he was 26 years old. Keeping in mind, I had a wife, 2 kids, and make $36,000 a year. And I didn't have a car payment because I couldn't afford a car payment. And we bought a house with no front yard, no backyard, no fence, no sprinkler system, no appliances, no drapes, no shutters. It was stripped down. Yes, it was a brand new home, but it was stripped down to nothing.
You had no upgrades.
We had nothing. And we had plastic toilet seats. I remember thinking, man, this house cost $100,000. I can't believe I don't have like thick Hard toilet seats. I remember the light fixture on the outside of the house was plastic. I was like, because it looked metal.
Yeah,
but it was plastic.
It.
I was like, don't you think it should have been a metal freaking light fixture for $100,000 anyway? But we just had different expectations. That doesn't mean that you're spoiled. It means your expectations have been changed by unrealistic social media comparisons, and you're missing out because you bring up a great point. Why would you be okay having all that credit card interest and all that credit card debt and that big car payment, but you won't invest that money in an equity building asset like a home can be? And that's where there's an opportunity. And so what would you advise people to do? Like, because if somebody finds themselves in that situation, they've got a lot of work to do. Like, what are they going to do? Like,
I mean, the first thing I'd say is stop spending money on stupid shit. And that's a Mel Robbins quote, I think, that she did a podcast on recently. Where she's just like, just stop. Like, you don't need to go out to the really expensive restaurant every Friday night. Like, there's nothing wrong with putting yourself on a budget.
This is where I get in trouble for being a boomer, though.
Well, no, because it's the exact same.
You guys buy $5 coffees every day.
I don't buy it every day. I figured out how to make my Starbucks at home. I did, because somebody called me out for how much I was spending on my coffee. And I'm like, well, shoot. You're right. I did just spend $8 on a coffee. That was dumb. But now I know how to make it at home. But I think that's it. It's where, like, the luxuries in life, like, how can you bring those in house? Put yourself on a budget. So, like, when I bought my first house, I was 25, 26. I was living in your basement. I was working here. I wasn't doing sales yet. I was $32,000 in credit card debt. I hadn't graduated from college yet because I'd failed my last class.
Wow, this is like,
it's
clean.
It's gross. It was ugly. And I was just like, okay, how the heck do I do this? And so I think I owed the IRS money too, because I didn't pay enough into my taxes the year before, because I was waiting tables at one point. So I wasn't paying taxes on my tips. And so it's just like, I mean, I had the luxury of living from home and you weren't charging me rent. Thanks. And so I put myself in a super tight budget and was like, okay, I'm only giving myself $100 of fun money.
I remember we did the spending analysis where we downloaded your last.
I still do that.
I did it without you knowing it because I had access, but you did it.
Oh, now we're really coming.
Because then I knew the answer because I knew what you were doing. You were spending all your money.
Yeah,
and I knew how much money you were making. I was like, why are you in debt and why do you not like own a house? And you're like, I don't have any money. And it's like, yeah, you do. And when I you learned that you did the same thing. You did it yourself though, and that was what I encourage people to do.
I do it twice a year.
90 days.
I still do it twice a year.
Good for you.
Where I pull all of our statements and I'm like, where are we spending money on stupid stuff? Where do I have? Because we're in the age of subscriptions. So like, what are you paying a subscription for that you don't know about or that's stupid and you don't use?
I like that.
Marcio called me the other day. He goes, "Are you paying $200 a month for a Dropbox?" And I'm like, I hope not. He goes, "You are." I'm like, it ended up being $200 a year, which is still too much, but it's just like, I didn't even know I was paying it.
You didn't even know you had it.
I knew I had Dropbox. It didn't occur to me I was paying for something. And so I think that's the thing. I think you need to go pull the last 3 months of all of your statements, your credit card statements, bank statements, however you spend your money. Stop going out every night. Stop buying your coffee every morning. It's okay to stay home and watch a movie. Like, just because there's some quote, and I don't remember where it
bring more baby boomer, more Gen Xers and Gen Yers in here like you, and go like, you tell them.
I'm not any of those things. I'm an elder millennial.
I'm an elder. You're an elder millennial.
I'm an elder millennial.
I need to bring more elder millennials into this conversation because you get it now. And
It's stop keeping up with the Joneses. It's stop spending however much bottle. I don't know if people still go to the bars anymore, but like we were paying for bottle service and stupid stuff.
Your brother, Donnie, told me when he did the same exercise before he bought his first house, because we went through the same thing. He's like, I don't have any money. He's like, you have money. You're just blowing it. And he goes, man, I didn't realize you could just throw your credit card on. I'll get the next round of drinks at the bar with everybody. And the next thing you know, you dropped a couple $100 at the bar.
Yeah.
And you don't even realize how much this is and how fast it adds up.
Yeah. Yeah. And I think especially now with like Amazon.
This was the advantage of getting married young and having kids as young as I did. Because I didn't have the freedom you had.
You didn't get to screw around. Yeah, I think I think we just need to simplify. I think it sounds terribly cliche, but just like going back to basics and just like pick one night a week to go out, or make sure that you're going out. Like there's nothing wrong with getting a discount on stuff and like taking your coupons and like going when there's a special for it, if it's something that you really want to do. Like have your luxuries. Like I couldn't live on $100 every 2 weeks of just like fun cash now because I've got 2 kids and a husband and all those things. But like there's definitely a number that's like, okay, what I did with it is I wouldn't take my credit cards anywhere. Like if I went out, I didn't take my credit cards. I took my $100 cash or whatever was left. And then once it was gone, that was it.
Well, that was what we did is we had you. She did what I recommended on this podcast.
I recommend it to all of my clients.
So you did what I said, which was like, when you get paid, take out $100. That's the money that you get to live on for the next 2 weeks for anything that you don't. And then everything else is you're going to power down and get rid of all your debt. And you can do it. If you made amazing progress. You did it in a really short period.
I paid off $30,000 in credit card debt in less than 6 months. But I did nothing. Like I stayed home. I watched 24 with you guys every night because that's when this was going on. And I do the same thing with my clients. So when I have a client, and it happens more often than I'd like, that comes in and they're just like buried in debt, I'll be like, all right. And I'll go through and I'll download all of their credit accounts and the balances, and I organize it based on the highest balance. And then I go through the payments and I'm like, all right, we're going to do the snowball effect. And I was like, I need you to get me the interest rates on all of these cards. And so then we go through and I'm like, all right, you're going to knock out this one, this one, this one. And then I went so far as I took another client she's completely upside down and we're trying to get her back to do a refinance to get her back to square one to start over. And I've sadly had to do this with her more than once because she just has bad habits, and that's just reality. It doesn't make her a bad person. She just has bad habits, and that's all it is. That's all this is. And I fall into the same bad habits every once in a while, which is why I still do the 3 months of spending. I went through her bank statements, and I was like, I go, what is this? And I like went through all of it. I go, what is this? Do you need it? What is this? And she's like, she was paying for 3 different gym memberships. And I go, do you need all 3? And she goes, well, I need at least this one because that's for my mental health. And I'm like, great. I love that for you. Let's cancel the other 2. Yeah. And then she had like some cable bill, and I go, can you get this down at all? And so I just went through all of it because this is like, I have a relationship with this woman and I want to help her. And it's just like, this is how we do it. And I follow up with her like every other month or so. I'm just like, okay, where are we at? What's paid down? And she's had some extra hurdles in there that we've got to still overcome, but she's doing the work. Yeah. And I think that's the other piece is like, if you found yourself in a lot of debt, like it's going to take work. You're going to have to make sacrifices.
Yeah. What's the alternative?
Yeah. The alternative is you keep living paycheck to paycheck and maybe you end up filing for bankruptcy. Or if you own a home and you lose your home, and then it's a different issue.
Here's the thing. We talk about in this country, there's a retirement crisis in America. People are living longer and they're retiring without any assets, without any wealth. And how's that going to turn out? The sooner, and that's where I believe home ownership is the great equalizer, is that home can become everything that you need it to become for you, even if it's the only home you ever buy. If you stay in that home and you pay off that mortgage and you build up that equity is your wealth. And there is an opportunity there to support yourself well into retirement with that equity. You take advantage of different things that you can do. Ultimately, if you ended up needing a reverse mortgage, it's definitely something that would people find really helpful. We're at about the 30-minute mark here. This has gone really well. I really appreciate it. Do you have anything that you would want to share with people that are listening?
Yeah, I think the only other thing is I get a lot of questions around my first-time home owners because I feel like we don't talk enough about first-time home owners that don't understand their equity position and what that can create for them. And I get a lot of people that are like, oh yeah, I'm going to start paying down my mortgage. And my question is always why? They're like, well, no, I heard you should pay it down. I'm like, again, why? If you have credit card debt, you should be paying that off first. If you're not if you don't have 3,
car loan.
Yeah, if you've got a car loan, pay that stuff off first. You're not getting anything out of that other than you have a car and like you just want to give money to Visa. No, nobody wants to give money to Visa or American Express. So pay that stuff off first. Then if you don't have 3 to 12 months of emergency cash, you need to have that. Then if you're not contributing to a 401k or some other long-term savings or retirement account, something like that, you need to be doing that first. And then and only then would I ever suggest paying your mortgage down faster.
You bring up a great point.
Because it's not that debt, that interest is good interest. It helps you on your tax returns. And even then, I still wouldn't say I still wouldn't necessarily pay down the mortgage. You have to live somewhere. You're going to be making a payment one way or another. And I was like, just bank the cash and throw it back into another savings account. So that way you're always over prepared for the next thing. Because the reality is every payment that you make on that house and every year that goes by, you're gaining equity, either through natural market appreciation or paying down the debt. And whenever you go to sell it or refinance it or whatever the case may be, the equity's still there. Like making an extra 100, everybody's like, oh, yeah, just make bi-weekly payments. Or if you make one extra payment per year, it saves this much off of the end of the loan. It's like, it does, but why?
Well, exactly.
And unless it's your forever home and you're like 70, I just don't think it matters.
Well, and if you're forever home and you're 70.
Yeah, that's a different conversation.
You need a different conversation. But
you know what I mean.
it sounds like I think this what it comes down to is the lack of financial literacy in this country, which is 100%. A whole other subject we could talk about. Thank you, Jacalyn, for coming on the show. I really appreciate it. This has been really enlightening. I think people are going to get a lot out of this. So this was good.
I hope so.
That's great. I'm Dave Gallegos. This is More Than Mortgage. This is Jacalyn Forleo. Thank
Hello.
you, Jacalyn.
Welcome.
Reach out to her. She's a great loan officer, and we'll be back for another episode. Thanks again for listening. If you like this, please give us a rating and share it with your friends. Thanks, everyone. Have a great day.
Thank you for listening to More Than Mortgage with Dave Gallegos, brought to you by Zenith Home Loans. If you enjoyed this episode, please subscribe anywhere you find podcasts and share this episode with a colleague who would also find value.